Hey, my name is James Wilkinson. Welcome to my YouTube channel. In this video, we're going to give you the October property market update. Oh my God, what a lot of stuff has been going on in the last month. It's changed a hell of a lot since September. Now, this channel is also about my investment journey. I'm building a portfolio for my two girls, Georgia and Amelie. Georgia has got two properties this year. We've got a house in Doncaster we bought at auction, and we bought a flat in Dorking in a block where I already own a property. Now, to join us on the journey to find out the good, the bad, and everything in between on property investing, take that finger of power, spin it round, guys, smash that subscribe button over there and hit the bell notification. Come on, do that now. So, what a month, right? Last month, we were talking about the market cooling off. This month, everyone's talking about a potential crash in the market. Now, interest rates rose since we last did one of these updates. So the interest rates are now at 2.25%. Now, this is the Bank of England's base rate, not the rate that you will unfortunately be able to achieve. You'll be paying a couple of percent at least on top of that. And so why did that happen? Well, first off, inflation isn't going anywhere. We've still got record inflation. It has been for a prolonged period of time now. It's starting to slow down, the inflation. It's not particularly getting worse, but it was predicted that at the end of January, it could be as high as 22%, mostly based off the energy crisis. Now, the government has stepped in and frozen energy bills at £2,500. That's going to make a big difference in people's pockets, right? So that's going to definitely curb some of that inflation, and we're going to see that coming through in the figures, I'm sure, very, very soon. Now, where the interest rates have got really worrying is the Bank of England the government did a mini budget. And so that went down like a lead balloon. It really wasn't popular with investors. And basically, the pound crashed. And so the pound crashed to its lowest rate ever. You pretty much got $1 to £1. It was a bit higher than that, but not much, which is insane. I remember when I was backpacking in 2003, you got $2 to a pound. And so that's a big difference in your buying power if you are going abroad. Now, that's going to impact people for sure. But international investors are coming into the market because everything's on sale in the UK for them. Now, because of this mini budget going down so badly, the Bank of England stepped in and said, look, what we're going to do is anything that it takes to prop up the UK economy. And there was talk the day after that they might raise interest rates last week by 2%, where they just put it up by 0.5%. Now, that didn't happen. The government backtracked on a income tax cut for higher rate earners. And so the market's got a little bit more stability. But we do know that in November's meeting, interest rates are going to go up again. Now, all of this has meant that the market has cooled down and potentially is dropping in some parts of the country. You see, what also happened off the back of this, because the rates were so unpredictable, banks stopped lending. Banks also got flooded with applications that they couldn't cope with, and so they pulled all their mortgage products off the market. At one stage last week, 40% of mortgage products were removed from the market. Now, the good news is they're back. The bad news is they're at higher rates. And I've just done a video on that, which you can go back and check about those new rates. But you're seeing rates at around 5.5%. If you want to get a fairly decent rent, and that was on a 100 grand loan. And so do go and check out that stuff. Now, that means that borrowing is going to be more expensive, particularly for buy-to-let investors who only pay the interest. And that means that they will borrow less and they'll be willing to pay less for an asset. Now, as investors, where we can benefit from this is, unfortunately, a lot of chains stalled. So there was a hell of a lot of chains that had a difficult time where one person maybe got their lending pulled from them, and that meant that a whole property chain might fall apart. So maybe you'd offered on properties in that chain and you could go back and give a revised offer to try and save that transaction for someone, and you might get a good deal off the back of that. Now, house prices haven't crashed officially yet, and so we haven't really got much data. There's not really any data out there because it's so much going on. about what is actually happening with house prices, but last time we looked at it, it was a 17% annual increase. I would be certain that we have definitely a flat market, if not a declining market at the moment. So house prices are going to start going down, right? That is likely, purely driven by the fact that lending is harder to get at the moment. Rates are going up. Some people are just going to wait this stuff out and see how it goes. So what else is going on? Well, legislation is still going ahead. So as buy-to-let investors, we've still got to be working on things like car EPCs. That sort of stuff is important, that we don't get hit by that in 2025. So you should, as an investor, be looking at how you can get insulation, make your house more energy efficient as well. Now, not much more has happened in the market this month because we've just been so consumed about what has been happening with interest rates. And so that is going to be the biggest thing going forward. If the rates are going to continue to rise, then of course it's going to get more expensive to borrow money. That means less people are going to do transactions. Opportunity-wise, now opportunities are really starting to come together for potential investors. You see, the market has been very hard to find deals in the last few years because prices have been going up significantly. So a lot of people have been jumping in, wanting to grab a good property and then hopefully ride that increase over the next few months and years. Now, because that's now stopped, there are less people in the market for transactions. I mean, we were looking at properties back a year ago. I did a viewing when I made the decision, right? So when I made the decision I wanted to buy a property for my daughter, Georgia, one of the first places we looked to invest was actually Birmingham. And so we found a property that needed some renovation. We went and had a look round. It was an open day and there were 20 people there. Pretty much straight away, I knew that property was going to get bid up and people were going to pay way too much, that it wasn't really worth that kind of money. And so we put an offer in, but we were nowhere near what we should have paid, what we could afford to pay to make that deal work. So we left it. Right? Now when you go to look at deals, you'll be lucky if there's one or two people there, because a lot of people, because the mortgage products have been taken away, they just don't have the funding. And so that is an opportunity for you guys to snap up some good deals. Also, some people believe that the market is going to crash, and so a lot of people want to sell now. They'll sell at a reduced price just to get it sold, so the market doesn't go down even more and impact them. So that's another key consideration. I'm going to be looking at auctions over the next few weeks and months. I've got an auction lined up next week that I'm going to be having a look at and just seeing what happens there, because I believe there's going to be probably more stock in that auction. I think there'll be less bidders in the auction because when you buy in an auction, you'll be buying with cash, but you will want a mortgage. So you'll probably buy with cash and then refinance at a later date, or you'll buy with a bridging loan. Now, they might also have difficulties funding at the moment, and so they could be slowed down. So that could be a dangerous way to buy. And so I think there'll be less competition in the auctions, meaning if you're an investor and you're looking to get into some deals, now is the good time. There's going to be some very, very good opportunities coming up very, very soon. Anyway, that's it. What do you think about the market at the moment? Are you positive about it? Do you believe that you can still get a good deal, whether the market goes down 20%, 40%? Some of you guys are predicting. What do you think, really? Comment below and let me know. Do like the video, guys. Check out all the other content on my channel. In the description, I'll put a link so you can come and join us at a live event we're running in London very, very soon. Put your details in there, get on the VIP list, and let's meet. Let's discuss how this can work for you guys. Do check out all the other content on my channel, including this video right here. Thanks for watching.